Good morning, everyone. So, welcome to chapter 3. So, for today's lecture, what we're going to be discussing is primarily what we call the adjusting the accounts. And particularly, the core of this chapter would be talking about both the accruals and deferrals. So, like what other concept lectures, let's first begin with like the overview of the lecture. And again, consistently, it's still gonna be following our BAA framework. So the very first step that we want to do is first broaden our understanding of the underlying business context. So we'll go back and review and take a deeper dive in one of the key concepts in accounting, which would be the time period assumption. So we're gonna take a look at that. And then from there, we're gonna try to relate it in terms of like distinguishing between cash basis accounting versus accrual based accounting. And then once we're clear in terms of the differences and the similarities between cash basis and accrual basis, then we're gonna go in terms of understanding our adjusting entries. So adjusting entries. So basically, before we do that, we have to first master the matching principle. So we'll revisit when do you recognize revenue, when do you recognize expenses properly. And then from there, we're gonna go into the core of the lesson, which would be the adjusting entries, particularly for deferrals or what we call prepayments, and accruals or what I call personally incurrences. And then from there, as usual, everything ties back naman to reporting. So once we master the journal entries for adjusting accounts, basically we'll just reflect it into what we call an adjusted trial balance. So now that everything is clear, we can go first into our first learning objective, which is again, let's go back to our very first chapter and let's take a deep dive in terms of what we call our time period assumption. So flashback. So basically, in terms of our fundamental accounting concepts, we mentioned before that there were four key assumptions, right? And these four key assumptions form the building blocks on which financial accounting measurement is based. And in particular, for this lesson, the one that I really wanted to hone in would be the time period assumption. So as a review, basically the time period means that in terms of accounting practices and methods, basically their reports are segmented for specific periods of time. And another thing that we note is that in terms of time periods, there's this level of discretion on what type of time periods company can use. But the key thing here would be that once they have chosen their time period, it has to be consistent each year. And the reason why it has to be consistent is that in terms of the purpose or the main goal of financial accounting, diba, it's transparency, meaning everything has a minimum level of disclosure. So you can be assured that in terms of material information to guide your decision, everything's there. But the second thing that's most important about financial accounting would be comparability. So comparability in two ways. You can compare the company against other companies given that they use the same accounting reporting, right? So is this company better or worse than these companies? And you can also compare kasi using across the time period. Na same company, pero you compare their performance in year 1, year 2, or time period 1, time period 2. And therefore, under time period assumption, it allows companies to report at every specific period, but it dictates that it should be consistent for the purpose of comparability, right? So I understand right now parang very theoretical siya. So let's take a more practical approach in terms of understanding the time period assumption. So basically, imagine that you have a company and because of the going concern assumption, you know that indefinitely in the next few weeks and the next few months, it will continue to operate. And in essence, this line represents your economic life of your business, right? And then the time period assumption dictates that there is a division of the economic life of a business into what we call artificial time periods. Meaning, hindi lahat ng companies, they report on a calendar basis. Hindi siya parang January or December, kailangan mag-post ka ng yearly financial statements. It really depends. And that's why we call it artificial time periods. So looking at the economic life, you can actually break them down into periods. So basically period 1, period 2, period 3, and so on and so forth, right? And every period, that's when you're required to create your financial statements. right? So in period 1, you'll have your balance sheet, your income statement, your changes in equity. Same with period 2 and period 3, right? So why did I say period or not year, right? Because again, we're talking about artificial time periods. So then the next question that you naturally ask is, ano nga ba yung mga different time periods, right? So here are just the 3 time periods that companies regularly use. So some companies use what we call a calendar year. So this is one that's closest to us. Basically, January sila to December nagre-report. So magre-report sila na end of December, right? But there are some companies that opt to have different time periods. Pero, so there are 2 ways. So one is what we call a fiscal year, meaning it's still a 12-month period, but then it doesn't start in January and ends in December. So some companies like Apple, for example, they have their closing would be on September. So if you're into trading or stocks, basically dun magfa-fluctuate yung price given that lumalabas yung reporting, right? And then some companies actually hindi nga every 12 months, but they have interim periods. So these are periods like less than 12 months. So let's say a quarter, like Q4, October to December. So again, we're still in the time period assumption. And it's basically saying na an economic life of a business is divided into time periods, right? And the reason why we're bringing this up is that sometimes some transactions have an effect on 2 different periods. Sometimes merong effect siya kay period 1 and then yung other effect niya is kay period 2. And therefore, because of these, usually it will require us to make what we call adjusting entries, right? So the question that we're trying to solve here is that how do we actually account for transactions that have different effects across different periods, right? And before we take into a deep dive into what we call adjusting entries, we have to first familiarize ourselves with 2 types of accounting, right? We have to distinguish between what we call a cash basis accounting and then another form which we call accrual basis accounting, right? So what are the difference? Basically, the 2 has a major difference on when it records transactions, right? So first, punta muna tayo kay cash basis. Basically, under cash basis accounting, yung transactions are recorded based on when cash is received or paid, right? So basically, in essence, you just follow the money, right? So cash basis, meaning when you look at the transaction, you ask yourself, is there a cash received or a cash paid? If there is, you make a journal entry. But if there's none, then you don't make any journal entries. So that's cash basis accounting, right? But on the other hand, the second type of accounting would be accrual basis accounting, right? So when do accrual basis record? So transactions are recorded based on occurrence, meaning even though walang money na involved or walang money na pass through, as long as there's a revenue earned or an expense incurred, you still make a journal entry. We do not follow the money, right? So basically clear naman the major difference. Basically, the major difference is again, when do you record, right? And then it actually gives you a hint on when do they record based on the name, right? Cash basis, you record only when cash is received or paid. For accrual basis, you only record or you always record every time there's an occurrence when it comes to a revenue earned or an expense is incurred. So this is actually our first stop point. So basically, this is the first thing that we really have to master. We have to understand the difference between cash basis and accrual basis. So for this, let's revisit our Kevin Trin Welding Company. So basically, as a refresher, for Kevin Trin, in chapter 2, right, he's a welding company. And then for the month of June, they had 5 transactions, right? And in chapter 2, so spoiler, basically in financial accounting, what we really care about is accrual basis. And then cash basis, it's not under generally accepted accounting principles. And in order for us to appreciate this, let's take a deep dive again to our Kevin Trin Welding. So like what we mentioned, in the month of June, they had 5 transactions, right? So now let's try to account under both methods, right? So on the left, let's make journal entries for cash basis. And then on the right, let's make entries for accrual basis. So first, let's make the first journal entry on June 1 for cash basis. So it says, Kevin Trin invests 4,400 cash in a small welding business of which he is the sole proprietor. So the first question under cash basis is, may cash bang involved? Yes. And therefore, we'll make a journal entry. So basically, what it's saying is that nag-increase yung cash niya because he invested money, meaning na tumaas si owner's capital, right? So in terms of our journal entry for this under cash basis, we'll have debit cash of 4,400 and then credit owner's capital 4,400. So that happened in June 1. Now we go to accrual. So accrual, hindi naman sila different in terms of the journal entries. Diba? The difference is when you record, right? So under accrual basis, we still have the same journal entry that yes, we still debit cash at 4,400 and yes, we still credit owner's capital at 4,400. So far, they're same. Meaning, if it's a cash transaction, usually, walang difference si cash basis and si accrual basis. But now, moving on to the second transaction on June 2, it says purchase equipment on account for 990. Pero the key thing here is that it mentioned on account, right? And therefore, the first question under cash basis, mayroon bang cash involved? The answer is no. And therefore, under cash basis, there's no entry. So basically, walang pakialam si cash basis kasi walang cash na nangyari, right? However, this is where the major difference comes in. For us, under accrual basis, there's still a transaction that happened. In fact, what happened was, nag-increase si equipment natin because we purchased an equipment. Pero, rather than having a decrease in cash because hindi naman natin binayaran, nagkaroon tayo ng liability, right? Now, we have to pay it in the future. And therefore, our journal entry under accrual basis would be debit equipment of 990, liability or accounts payable 990, right? So, June 3, there is cash involved, right? So 880 cash is paid to the landlord for June rent. So we have rent expense of 880 debit and then credit of cash 880. So in June 3, meron na namang cash transactions. And therefore, wala tayong problema. We will record the same, right? So moving on to the fourth transaction, bills 930 for welding work done on account. So what happened here was that we earned revenue but then wala pang nagbayad sa atin in cash. And therefore, under cash basis accounting, wala tayong pakialam, right? So, the fourth transaction, there is no entry for the fourth, what happened in June 12. Inversely, under accrual basis, we care about the revenue being earned, right? So, we account for it. So, unlike cash basis na wala silang entry because no cash is involved, for us, we know that tumaas si revenue. So we have debit revenue. Pero tumaas rin yung accounts receivable natin or our asset, right? And therefore, our journal entry under accrual basis would be debit accounts receivable, credit service revenue, right? And then finally, in June 19, nakatanggap siya ng pera, right? So that's the only time it will recognize revenue. So under cash basis. Na ang mangyayari is we'll have what? Cash service revenue of 450. And then we'll have cash 450. Pero here, unlike service revenue, it should be accounts receivable, right? So in terms of our trial balance, what will happen is that there would be key differences, right? So let's try to spot the difference. So on the left, you'll have your trial balance under your cash basis. And then on your right, we have your accrual basis accounting, right? So first, let's look at cash. So cash, wala tayong problema. Pareho sila. 3,770. Because again, pag may cash na involved, cash basis, accrual basis, they account for it the same. Ngayon, we don't have accounts receivable at 680 and we don't have equipment at 990. Why? Because these are transactions that didn't involve cash. Si equipment, we bought it on account. So even looking at accounts payable, wala rin, zero kay cash basis. And then kay accounts payable, 990, right? So basically, wala tong tatlo, right? And then the capital is still the same at 4,400. And then in terms of revenue and expenses, kindly look at the difference. In cash basis, the revenue lang was the 250 cash they received. Compared to accrual basis, their service revenue is 930, right? And then yung rent expense, the reason why they're the same is because they paid for the expense in cash. That's why there's no difference. So as you can see, iba rin yung totals of their trial balance. So 4,650 and 6,320. So again, same company, different accounting methods, right? One is cash basis, the other is accrual basis, right? And quick question sa class. So blindly, so let's pretend for a second that you don't know who Kevin Trin Welding is, right? And then you have company A that has revenues of 250, and then company B that has revenues of 930. So among the two companies, kindly type in the chat quickly, parang which companies would you invest in, right? Is it company A, company B? Yeah. So I see a lot of people, definitely, right? So si company B. So basically, ang problem with cash basis is that it understates your revenues and even your expenses, right? So hindi siya yung accurate performance ni company. It's unfair for the company na, wow, I'm earning so much. Hindi ko naman kasalanan na hindi pa nagbabayad sa akin yung clients ko, right? And therefore, the one that really truly reflects a company's worth is on their accrual basis. So now, kindly take note that this is from a financial accounting perspective. So some parang from a finance perspective, they'd argue na cash basis is fine because for them, cash flows are more important than your earnings because earnings for them is just an indication of cash flows. But for us as accountants, what we really want to present is the accurate measure of a company's performance and financial position based on a given set of rules. And therefore, under financial accounting, what we follow would be accrual basis, not cash basis. Okay? So again, remember, in financial accounting, in 99.1, we only follow accrual basis, not cash basis. And in order to support this, the next concept before we dive into the journal entries now we need to understand is that we need to talk about the matching principle. That another reason why accrual basis is the preferred and the only method allowed under generally accounted principles in the IFRS is because of what we call the matching principle, right? And for this, basically, we have to take a step back and look at or ask ourselves, when do we recognize revenue, right? And going back to the classic definition of what a revenue is, basically, you record revenue every time there's an increase in future economic benefits when a company has occurred, right? So you record revenue every time tumaas yung future economic benefits, right? And honestly, in future accounting or in advanced accounting, there are strict guidelines. There's actually 5 steps in order for you to recognize revenue, right? That number 1, you identify the underlying contract. So either written contract or even implied contract. For example, pumunta ako sa mall, punta ako sa Toby's, may nakita akong sapatos, right? There's a price tag there. So basically, when I get it, there's an implied contract that I'm gonna buy it for its price, right? So that's the first requirement. The second would be to identify the obligations of both parties, right? So in the shoe example, my obligation is to pay them the money and their obligation is to give me the shoes, right? And then third would be to determine the price. So meaning the price would be, let's say, 4,000. So 4,000, the 4,000 yung price, right? And then allocate the price to the obligation. So again, the obligation for me is to pay the 4,000. And then for them, once they receive the 4,000, for them to give me the shoes. And then recognize revenue when obligation is satisfied. So from the perspective of selling company or Toby's, they recognize revenue when nabigyan na nila yung obligation, which is to give me the pair of shoes, right? So, in essence, medyo complicated na yan. But in essence, it still goes back to one thing, that you recognize revenue when there is an increase in future economic benefits. So basically, we'll take a closer look at this later, right? In the future examples when we actually go into adjusting entries. Now, on the other hand, when do you recognize expenses, right? So basically, baliktad, right? You recognize expenses when there is an outflow, right? Or where there is a decrease in future economic benefits have occurred, right? So basically, under expense, unlike revenue na may strict rules like 5 steps, etc., etc., under expense, there's only one thing that we have to take note, and that's the thing called matching principle, right? Wherein expenses should be recognized in the same period a relevant revenue is recognized, right? So what do we mean by this? So I understand parang medyo weird. So let's take another example or a closer look at a matching principle. So usually in layman's terms, right? People interchangeably use costs and expenses, right? Parang cost. So what's the cost? What's the expense, right? But in accounting and even in finance, costs and expenses are totally different things, right? Costs are basically things that you pay for in order for you. So costs recognize an asset or something that is being consumed, right? Pero expenses are when that consumption is recognized. So what do I mean by this? Basically, let's talk about like a car. So one of the things, one of the more popular cars right now is like the Cool Ray, right, from Geely. Let's just pretend for an example that in anything that you're selling, there will always be your costs on the left and your selling price on the right, right? So the cost in order to make one car of Cool Ray would be definitely you have to buy the tires, you have to buy the car parts, you have to buy the engine, etc., etc., right? And let's say the total cost in order to make one Cool Ray would be 800,000 pesos. So syempre, as a businessman, syempre you want to earn from selling something. So definitely you're not gonna sell it at 800,000, right? You're probably gonna sell it at a markup or at a margin. So let's say that the SRP or the standard retail price or the selling price of the Cool Ray would be 1.2 million, right? So now let's apply the matching principle. Let's say in 2021, this particular car was not sold, right? Therefore, there's no revenue from us and we don't make a journal entry. So ano mangyayari kay cost? Kasi we already spent the 800,000 eh. Should we record it as an expense? The answer is no. Under the matching principle, we only recognize expenses when the relevant revenue is recognized. And the relevant revenue for this particular cost is the 1.2. Since we didn't get the 1.2 yet in 2021, we will categorize this cost as inventory or as asset, right? So that's the difference between a cost and an expense. A cost can be categorized as an inventory or as an asset kasi hindi pa siya nabebenta. So in 2021, since there's no revenue, we match it. No revenue, no expense, and therefore 800,000 in inventory, right? So let's look at the next scenario. Let's say next year, the car was finally sold. So first question, nagkaroon ba tayo ng revenue? Yes, right? So we had a relevant revenue of 1.2 million for this particular car. And therefore, the matching principle dictates that we have to recognize the expense in the same period, meaning in 2022. And therefore, in 2022, we will now then recognize the consumption. So from inventory, we'll turn it into an expense. Yung 800,000 will then be a cost of goods sold expense, matching the 1.2 revenue attributed to this particular car. And in essence, that's basically what the matching principle is, right? That expenses should be recognized in the same period a relevant revenue is recognized, right? So going back to this example, let's say meron kang clerk that's not in charge of selling, or may salaries ka lang of your top executives, that's not completely related to the selling of the car, right? So what happens then is like, for example, advertising. You spent 200,000 in advertising. We consider advertising as not a relevant or related expense to selling the car. And therefore, in 2021, if you spend 200,000 in advertising, that will outright be expensed, right? So, ang importante sa matching principle, you have to match only the relevant cost to the relevant revenue, right? So, in summary, expenses again should be recognized in the same period. A relevant revenue is recognized. So, before I proceed to the adjusting entries, do we have any questions regarding the last 3 learning objectives or none? Kindly thumbs up na lang in the chat if we can proceed. Okay, perfect. So thank you everyone. So now moving on, we go to the learning objective 4, right? So now we finally go to the core of what we're going to be discussing today, which would be the adjusting entries. So going back to what we discussed earlier, basically, we first highlighted na there is a time period assumption. So basically, we break it down into specific periods. And then from there, we distinguish between cash basis and accrual basis. And we determine that in financial accounting, we use accrual basis, meaning we record every time a transaction occurs, whether a revenue is earned or an expense is incurred. Then from there, we just justified why we follow accrual basis through the matching principle. That because of accrual basis, we're able to follow both the revenue recognition and the expense recognition principles. So now, the reason why we're discussing adjusting entries is because these are the ones that you use under accrual basis accounting, right? And before we take a deep dive into like the actual journal entries, the first question is, why do we actually need adjusting entries, right? So adjusting entries make sure that your revenue and your expense recognition principles are followed by the company. So basically, adjusting entries are required every time a company prepares financial statements, right? And take note that they are usually made on the last day of an accounting period. Meaning, may prepared trial balance ka na at the end of the period. Tapos after mo i-prepare yung trial balance, you'll create adjusting entries depending on the particular transactions that needs to be highlighted, right? And what is the rationale for this? Di ba may trial balance ka na? Bakit mo pa kailangan i-adjust, right? Why do we need adjusting entries? Because when you create that trial balance on the last day of your reporting, that trial balance or the unadjusted trial balance may not contain up-to-date information. Why? So there are probably like 3 reasons, top 3 reasons why, probably there are other reasons, right? So number 1, from the perspective of an accountant, some events are not recorded daily, right? So sometimes, it's too time consuming or even costly na everyday na lang may ginagawa ka. Kino-compute ka, ganun. So sobrang time consuming, right? So some events are not recorded daily. Better na, rather than make 30 entries, right? Let's just make 2 entries. The initial entry at the start, and then at the end, i-adjust na lang natin siya. So that's one reason why we need adjusting entries. Second, some events are not journalized during the period. So some accounts expire with the passage of time. So some accounts, for example, rent, right? Nag-rent ka for 1 month. Hindi naman pwede na parang may daily transaction every day, tapos adjust mo yung rent every day. Usually, the consumption of rent expires with the passage of time. And therefore, again, we need, from the initial entry, better na lang to have 1 adjusting entry for that particular account, right? And then third, would be some items may be unrecorded, right? So basically, because, pare, nagkaroon ka ng revenue, tapos hindi mo pa na-bill. So technically, may revenue ka na eh. pero hindi pa siya na-record on the last day, right? So therefore, you have to record those that are unrecorded. And therefore, we make our adjusting entries, right? And we have two major categories under adjusting entries. We have what we call our deferrals, or what other people call prepayments, right? And then the second types of adjusting entries would be our accruals or our incurrences, or what I call incurrences, right? And in order to differentiate the two, better to look at it from a now and later perspective, right? So meaning, there's two affected entries palagi. There's an initial entry, which happens now, and then there's an adjusting entry, which happens later, right? So basically, what happens in prepayments, as the name suggests, prepayments, right? Ang palaging nauuna is yung cash, right? At the start, you either receive or you pay cash. And then later on, that's when you recognize revenue, right? So now, so there's two scenarios under deferrals or prepayments, right? First scenario is you receive cash now in point A, and then in point B, that's when you recognize revenue at a later date, right? The second scenario under prepayments is cash ulit now, meaning we pay cash in point A, pero we only recognize expense later at point B, right? So again, two time positions, right? So again, now you receive cash, and then later mo pa i-recognize yung relevant revenue in that particular cash transaction. Or you pay cash, and then later mo na lang i-recognize yung expense, right? Clear pa naman so far? Are there any questions? Yeah. Okay. So clear tayo deferrals, prepayments. And prepayments, as the name suggests, nauuna palagi yung cash, right? On the other hand, let's go to accruals, right? Accruals talk about incurrences. So ang nauuna is yung incurrence, right? Meaning, ang nauuna, in point A, nag-recognize ka ng revenue, pero in point B or later mo pa makukuha si cash, right? Scenario 2 under accruals is that you'll recognize or incurrence first, meaning mag-recognize ka muna ng expense, and then in point B, dun ka lang magpe-pay ng cash, right? So in essence, that would be your accruals. Na again, you have two scenarios under accruals. First, you recognize revenue, and then later, dun mo lang i-receive yung cash. Or scenario B, mag-recognize ka muna ng expense, and then later mo na ipipay si cash. So for me, parang nakakalito kasi ang daming names, like I've never used deferrals or accruals in my life, parang before accounting, right? Pero parang madali, just take note of where the cash is. In deferrals or what we call prepayments, dahil prepayments, what happens now is that you receive or pay cash. So nauuna si cash, right? In accruals, si cash naman nahuhuli, right? The cash transactions happen at a later date. Ang nauuna would be the incurrence or the recognition of your revenue or the recognition of your expense. So in chapter 2, I mentioned na ang importante na you memorize would be your debit-credit matrix. For deferrals and accruals, for me, ang super important ma-memorize would this be particular slide. You have to be really clear in terms of the difference between deferrals and accruals. And then how to categorize transactions. Like, is this transaction a deferral? Is this transaction an accrual? So that you'll know how to properly account for this, right? So, do we have any questions so far or none? Okay. So, feel free to type kung hindi clear, right? Okay. So, wala pa naman so far. So, for me, don't worry. I think everything will be clearer once we go to the examples, right? So, for today, we're gonna be taking a case study called Bathala Consulting, right? So, chapter 1, si Miao Lee, and then si chapter 2, si Kevin Trin. Si chapter 3, it's all about Bathala Consulting, right? And unlike the others, meron ng trial balance si Bathala, right? So as of March 31, they have the unadjusted trial balance presented below. So their totals would be 24,150 in debits and in credits. So in our examples, in our discussion, imagine that today is the last day of the accounting period, meaning March 31 na. And our task is as follows. First, we have to record adjusting entries, meaning particularly for deferrals. Second, we have to record adjusting entries for accruals. And then finally, we adjust the trial balance. So this is unadjusted. So basically, the formula is you have your unadjusted trial balance, you make your adjusting entries, and then you adjust the trial balance, right? It's sense. So now, let's first deep dive into what we call deferrals or prepayments, right? And like what I mentioned, these are transactions that are cash now, right? So deferrals, again, with the definition is that cash is received or paid first prior to earning the revenue or incurring the expense. And under deferrals, you have two types, right? The first type is what you call your prepaid expenses. Talking about the first scenario, wherein at the start, you pay cash, and then later mo na i-recognize si expense, right? So again, nauuna si cash. The second type or the second scenario talks about what we call unearned revenue, meaning for this particular scenario, you first receive cash and then later mo na nire-recognize si revenue, right? So, basically, again, you have two scenarios. You pay cash to recognize expense under your prepaid expenses. And then you receive cash first, and then later mo na-recognize yung revenue. So these are what you call unearned revenue accounts, right? So now, let's look at it from a journal entry perspective. So first, let's go to prepaid expense. Basically, what happens is that when you pay cash, magkakaroon ka ng initial entry. So reflected na to dun sa trial balance na I showed you earlier. Meaning, when in the period, you pay cash, wherein you'll record a debit of an asset and then a credit of cash. Why? Because the rationale here is that nagbayad ako ng cash in order to buy something that will provide future benefits for me. And therefore, debit asset, credit cash would be your initial recording for your prepaid expenses. So that's, let's say, day 1, right? Fast forward to day 30. Hindi yung asset mo. So for example, I'll just jump forward in terms of like the example. Pero for example, a classic example of prepaid expenses is supplies, right? Meaning, in day 1, bumili ako ng, let's say, 1,000 pesos worth of bond paper, right? So, mangyayari doon, debit asset of 1,000 or supplies, credit cash of 1,000 because I paid 1,000 pesos for bond paper. And let's say like September 1, right? Now, tapos na yung September 30. So, a month has passed. And then, pina-check ko sa friend ko, uy, ilan na lang yung bond paper na natira, right? Sabihin nila, siguro mga 50 pesos worth na lang. Kasi nag-print for like, I don't know, like accounting exercises or whatever. Right? So, mangyayari dito, from our initial entry, on the ending period, ang mangyayari is that before adjustment, our assets are overstated. Kasi in the initial entry, yung supplies natin is at 1,000. Pero in actuality, ang account lang natin would be 100 pesos worth of supplies. So again, assets are overstated at 1,000 because in actuality, on September 30, 100 na lang siya. Right? So, my assets are overstated. Kailangan natin siya pababain to 100. And therefore, we have to recognize the consumption of the expense. And therefore, even then, yung expenses mo are understated. And therefore, your adjusting entry for prepaid expenses would be you increase your expenses and then you decrease your asset. Because before adjustment, the assets are overstated and therefore you have to decrease your asset to put it in the right balance. And then expenses are understated and therefore you have to increase your expenses. So the adjusting entry for prepaid expenses would be debit expense, credit asset, right? So kindly stick with me. I promise in the exercises, this would be much clearer. Pero again, ito yung parang overall framework natin for deferrals, right? Unearned revenue, baliktad naman. So since we receive cash, right, we recognize an increase in cash, pero increase also in the liability. So for example, I offer tutoring services aside from like 99, right? And then ang promise ko dun sa tutor ko would be, give me 20 pesos or hindi naman, sorry, mga 1,000 pesos and then I'll teach you for 2 sessions, right? So basically nag-down payment na siya sa akin ng 1,000. So tumaas yung cash ko, right? Pero I haven't really performed the obligation na I promised. And therefore, I have a liability for that tutor. Na I have to teach them for 2 sessions. And therefore, may liability ako, right? So I have unearned revenue, meaning it's a liability. Hindi ko pa na-perform yung obligation and therefore I can't recognize revenue. So let's say, fast forward, end of the period na. Nagawa ko na yung 2 sessions. Therefore, na-earn ko na yung revenue ko. Wala na akong liability sa kanya, right? So before the adjustment, my liabilities are overstated because in the example I gave, 1,000 pa rin yung liabilities ko in the adjusted trial balance. When in fact, hindi na yung liability, revenues ko na yun. And therefore, revenues are also understated. And therefore, my adjusting entry would therefore be, we decrease the overstated liability and then we increase the understated revenue. So again, before the adjustment for unearned revenue, basically, your liabilities are overstated. And therefore, we have to decrease your liability by debiting liability, right? Next, your revenues are understated. But therefore, if it's understated, we have to increase your revenue. And therefore, we have to credit revenue. So basically, this is the basis of your deferrals, right? So you have your prepaid expenses and you have your unearned revenue. Let's first focus on prepaid expenses, right? And under prepaid expenses, we have 3 examples. So for me, kindly make sure na in prepaid expenses, sobrang mamamaster nyo how to record for supplies, for prepaid rent, and equipment depreciation, right? Aside from other exercises that you can find in Waygan, right? So let's first go to supplies. So remember, we're on the last day of the accounting period. But there are certain transactions that happen during the period that we need to adjust. And one of them would pertain to supplies. Yes, sorry. So in terms of like the credit the liability, not cash. Yeah, sorry. We'll correct it na lang in the recording and in the PowerPoint when I send. Yeah. So let's look at the journal entries from a more practical standpoint, right? So first, the journal entry is, Bathala Consulting purchased office supplies for 950 cash. And then after a month, the remaining office supplies amounted to 50 na lang, right? So if we had to break it down, basically there are 2 points, the now and the later, right? So in March 1 raw, basically you paid 950 in order to get 950 worth in cash, right? So March 1. Pero fast forward after a month, syempre ginagamit yan, right? Naging 50 na lang worth. From 950 naging 50. So now let's analyze it using our framework that we use. So the initial entry when we paid for cash would be, again, debit an asset, particularly supplies for 950, credit cash of 950. So now in March 31, on our last day of accounting, ito pa rin yung naka-reflect sa trial balance. Now the problem with this is that before we adjust, the assets are overstated and the expenses are understated. Why? Because under the supplies account, so March 1 definitely 950 siya kasi ganun yung binayan natin. Pero in March 31, when we conducted the physical count, 50 pesos na lang yung worth niya, hindi na 950. Therefore, we have to adjust. Therefore, assets are overstated at 950, right? So kailangan we decrease our supplies by 900 in order to reflect the true amount of 50 na lang siya. Conversely, saan mapupunta si 900? Dahil na-consume yung asset, that is in essence an expense. Therefore, in March 1, zero yung expense mo kasi asset pa siya, right? Pero in March 31, 900 na yung nagamit mo. Therefore, 900 talaga yung totoong supplies expense. And therefore, understated si expense. Kasi right now, before adjusting, zero kasi supplies expense. Pero in fact, it really should be 900. So we have to increase our expense ng 900. Therefore, our adjusting entry would be supplies expense 900 debit to increase the expense account. Credit supplies account by 900 to decrease the asset. So clear pa naman so far? Is everything clear? So again, ulitin natin. So in March 1, bumili ka ng asset worth 950, right? So March 1. So again, we recognize an increase in asset of 950 in supplies. And then syempre nagbayad ka ng cash, so credit cash of 950. So that's totoo naman. Accurate yon in March 1. Pero we're now at the last day of the accounting period and it's March 31. And that 950 asset was slowly consumed day to day. So every day, ginagamit mo yung paper, nagpiprint ka, nagdoodle ka, nagdrawing ka, etc. etc. Or nag-shoot ka sa trash bin, whatever. So yung 950 mo na supplies, in essence, nababawasan yan through time. And in March 31, we determined na yung true value niya is 50. Right? So may na-consume na 900 pesos worth, $900 worth of supplies, which will now categorize an expense. And therefore, in the unadjusted trial balance, ang naka-reflect pa would be the March 1 values, which is our supplies is at 950 and our expense is at 0. When in fact, the true value should be that the supply should be at 50 and that the 900 remaining should be recognized as an expense. And therefore, that's the reason why, in summary, our assets are overstated because right now it's stated at 950 when in fact it should be 50. And that our expenses are understated because right now in the unadjusted trial balance, it's at 0 when in fact it should be at 900. And therefore, in order to adjust for this, we have to first decrease the supplies by 900 and increase our expense by 900, represented by our very first adjusting entry, debit supplies expense 900, credit supplies 900, right? So that's basically our first example of a deferral or a prepayment, right? So for this, I'll also give you formulas in order to account, right? So how do you solve for the 900 mathematically? So basically, you first look at your supplies per record. So on our record, it's at 950. And then you compare them in terms of the actual value that you have on hand. So again, it was determined na 50. And therefore, what was used up was $900 worth of supplies, which will now become an expense, right? And therefore, yung 900, we will debit supplies expense 900, credit supplies at 900. So in the unadjusted trial balance, meron na tayong 950 in debit. Now we adjust that, right? So how? Basically, yung supplies expense muna, ilagay natin sa supplies expense. So 900. And then si supplies, babawasan natin ng 900, right? So ito yung adjusting entries in RT accounts. So that at the end of the day, it will reflect the true value at 50, right? So 50 na lang talaga si supplies and then 900 si supplies expense. Okay, so that ends our first deferral example. Are there any questions before we proceed to prepaid the rent? Okay, parang wala pa naman. Yeah. So now, let's go to prepaid rent. So we're done with supplies. Let's now analyze the deferral that's called prepaid rent. So basically, Bathala Consulting rented an office space from HLC building and paid 3,000 for the first 3 months, right? So again, let's just imagine what happened. We have point A and point B. March 1, March 31, right? Nung March 1, we paid 3,000 in order to get 3 months worth. So in terms of our rent, may 3 months left pa tayo in March 1, right? Fast forward another month or March 31, syempre, yung rent natin, 2 months left na lang, right? Because 1 month has passed. And therefore, we have to recognize or we have to adjust. Kasi nag-consume na tayo ng 1 month's worth of rent, right? So how will we account for this? So in the initial entry, when we paid cash, basically we recognized an asset called prepaid rent. So debit prepaid rent of 3,000. And then, syempre, we paid cash. So credit cash, 3,000. So now we're at March 31. And before adjustments, our assets are again overstated and our expenses are understated. Why? Because in the trial balance right now, ang naka-reflect yung March 1 values niya. That the prepaid rent is at 3,000 and the expense is 0. When in fact, right, our prepaid rent is actually at 2,000. Why 2,000? So I'll show you the formula in the next slide. Pero logically, bakit naging 2,000 na lang, right? Kasi we paid 3,000 for what? 3 months rent, right? So what would be the monthly value niya, right? So 3,000 for 3 months. So 3,000 divided by 3, meaning every month, 1,000 pesos yung ginagastos natin on rent, right? And therefore, since 1,000 yung expense natin for the month, 3,000 minus the 1,000 na expense na dapat, our asset should be at 2,000 na lang. Because the other 1,000 became an expense, right? And therefore, the true value or what should be the value in March 31 should be that your prepaid rent should be decreased by 1,000 at 2,000 and your expense will increase by 1,000 to recognize the 1 month rent that you already consumed, right? Yun. So therefore, our adjusting entry on March 31 would therefore be we decrease our prepaid rent by 1,000 and then we increase our expense by 1,000 and therefore the journal entry for this would be debit rent expense, credit prepaid rent. Right? So this will correct our overstatement of assets and our understatement of expenses because si assets pinababa natin ng 1,000 in order for it to reach the true value of 2,000. Si expense, pinataas natin by 1,000 to reach its true value of 1,000, right? Represented by the journal entry, rent expense 1,000, prepaid rent 1,000. So how do we solve for prepaid rent? Basically, you look at the rent paid and then you divide it by the months covered, right? So basically, 3,000 divided by 3, your monthly expense should be 1,000 and therefore 1,000. So looking at the T accounts for the relevant, you have prepaid rent and rent expense. In the unadjusted trial balance, may balance na 3,000 si prepaid rent. All we have to do is adjust it in order to reflect its true value, right? And si rent expense currently is at 0. So by plotting in or adjusting entry, so debit rent expense, credit prepaid rent, we'll be able to bring them down or bring them up to their real value. So for the prepaid rent, it's overstated at 3,000. Therefore, we debited 1,000 to bring it down to its true value of 2,000 dapat yung prepaid rent. Si rent expense was at 0. We have to bring, or which means that the expense is understated, and therefore we increase it by the 1,000 to represent the consumed rent. And therefore, the true value would be 1,000 in rent expense. Okay. Yep. Correct. So now, we go na to the last. So nasa last na tayo ng prepaid expense. Equipment depreciation, right? Just wanted to make sure no questions pa so far. Yeah. So feel free to air it out kung hindi clear lang. Okay. So now we have equipment depreciation, right? So again, pag meron tayong adjusting entry, we imagine what happens, right? So again, point A, point B. At the start or upon initial recognition, we bought raw a computer for 2,400 in cash, right? And then it will live up to 5 years. So I don't know. So for those na parang usually upgrades their phones every 3 years, right? So in essence, the underlying concept for a depreciation is that your gadgets or your equipment can only last you a lifetime. Can only last you for a specific amount of time. So for equipment like a computer, probably the useful life would be 5 years, right? So I'm not sure for the class, pero like depende on your usage. Regardless kung maingat kayo, right? Parang usually every 5 years nagpapalit kayo because of planned obsolescence by the companies. So usually may useful life yung equipment. In accounting, we want to formalize that by calling it the useful life, right? So we bought the computer for 2,400. And then at March 1, brand new, 5 years left, right? Pero after a month, nag-depreciate na yung actual value ng computer natin because 1 month of its useful life was used. Right now, in March 31, 4 years, 11 months na lang yung natira, right? So what would be the initial entry during March 1 or something? Our initial entry would be definitely increase your asset or your equipment by 2,400 and then credit cash of 2,400 kasi binayaran mo, right? Pero fast forward to March 31, in our unadjusted trial balance, before our adjustments, our assets are overstated and our expenses are understated. Why? Because your equipment depreciated. The value na now is 2,360. And therefore, the 40 na nabawas sa kanya is an expense that we should recognize because it's a consumption of an asset. So in the unadjusted trial balance, yung balance ng equipment is at 2,400, yung balance ng expense is 0, which is wrong, right? Because again, the equipment is overstated at 2,400 because the true value is 2,360. So it's overstated by 40 and therefore we have to decrease it by 40. See, expenses, on the other hand, is understated because on the unadjusted trial balance, 0 pa siya. When in fact, the true value should be 40. And therefore, we have to increase this in order to mitigate the understatement, right? So now, the question is, how did we solve for 2,360 na lang, right? So the question is, we have to figure out magkano ba yung monthly expense niya, right? And one way of looking at it is that 5 years can be times 12. You roughly have 60 months, right? So in March 1, you had 60 months left. And then in March 31, you have 59 months left. So in essence, the only month that you consume is 1 month's worth of your computer, right? And therefore, we know that 60 months is in 5 years. So 2,400, the value of the computer, divide mo by 60, meaning every month, 40 pesos yung na-depreciate sa kanya or na-expense. So therefore, 40 expense mo, and therefore, yung true value mo is 2,400 minus the 40 na expense for 1 month. 2,360 na lang yung true value ni equipment. Right? And therefore, our adjusting entries for this would be, we increase our expense, depreciation expense at 40 at debit, and then we credit an asset. So intuitively, you'd think we'd credit equipment. Pero equipment is a special case wherein I'll introduce a new account called accumulated depreciation, which is still an asset, particularly a contra asset, at 40. So now, basically, again, the journal entry for this is debit depreciation expense of 40, and then ACDEP credit of 40. In essence, it's the same thing. Pinapababa ni ACDEP si equipment to 2,360. So now the question is, what is accumulated depreciation, right? So accumulated depreciation is a contra asset to our equipment account, right? Or any PPE or property, plant, and equipment, right? Wherein, basically, you have your equipment will always be reported at its cost. So 2,400. Pero we know that it should be reported at 2,360. Pero rule ng accounting is that the equipment should always be reported at cost. So baka natin galawin to. So therefore, we introduced a contra asset account called less accumulated depreciation to subtract the 40. So si accumulated depreciation is the one that will track kung ano na yung true value niya because you'll always subtract your accumulated depreciation to your equipment that's recorded at cost, right? So 2,400 minus 40 will still reflect your true value of your equipment at 2,360. So accumulated depreciation, even though it's an asset account, it's a contra asset. And what did we learn in lecture 2? Na pag negative siya, naturally negative, similar with expense or similar with owner's drawings, babalik ta rin mo yung normal balance. And therefore, asset, ang normal balance niya is debit, right? A contra asset, which we always subtract from an asset, it reverses that. And therefore, ang credit balance is the normal balance of our accumulated depreciation, right? So, yun. Kindly take note of accumulated depreciation. Matagal pa naman yung PPE, pero this is a very important concept for you to absorb, right? And therefore, how do we solve for depreciation? I showed you one way, but this is another way. You look at the cost, and then you identify what is the useful life. So 5 years, right? So 2,400 divided by 5 would be 480 in yearly expense. Pero again, we're in March 31, only 1 month is consumed. So 480 divided by 12 is equal to 40. So same pa rin, right? Different approach now. And therefore, these are your unadjusted balances for your trial balance. Yung property plant mo initially was at 2,400, si depreciation expense was at 0, and si accumulated depreciation is at 0 also. But again, these are wrong. These are unadjusted. So we have to adjust them by debiting depreciation expense of 400 and accumulated depreciation credit ay 40, right? And therefore, our new balances would be 2,400 pa rin si PPE, depreciation expense rose to 40 and ACDEP rose to 40. Pero pagbabanggain mo naman to na the 2,400 the property plant minus the accumulated depreciation 40 would give you the true value of your equipment at 2,360. So actually, we're done with the first batch of deferrals. So we're done with supplies, we're done with prepaid rent, and we're done with equipment. So in essence, ito yung unadjusted trial balance natin. So we took note of the journal entries, so supplies, prepaid rent, and equipment, right? Pero one of the things I want to highlight, in-explain lang namin yung initial recording. Pero ang talagang mas importante dito is the adjusting entry. Meaning, what do I mean by this? The initial recordings are already reflected in this unadjusted trial balance. So these initial recordings are already reflected here. Ang hindi pa reflected would be our adjusting entries. So for example, our supplies is at 950. Ayun, naka 950 siya. Our prepaid rent, 3,000. Our prepaid rent is at 3,000. Our equipment is at 2,400. Our equipment is 2,400. So all initial recordings are already in your unadjusted trial balance. Pero the next step that we'll do is we'll adjust them later, right? After we've discussed deferrals and accruals, right? So we just showed you the initial recording so that you'll appreciate the changes or why they are called adjustment. Right? So now we move on to the second scenario. So the first scenario was prepaid expense, you pay cash and then you recognize the expense later. The unearned revenue, you receive cash, pero you recognize revenue at a later date. And then from this, we'll look at what we call the unearned rent revenue. And then we'll take a break from our case study. So hindi tayo from the perspective of Bathala. Let's look at the perspective of the company that rented to them, right? So this won't affect our Bathala financial statements because this is again from the perspective of our landlord, HLC building, right? So HLC building rented out an office space to Bathala Consulting and received 3,000 for the first 3 months. So what happened? Basically, again, may 3 months left si client, pero after April 30, so let's say April 30, so 2 months, right? After 2 months, 1 month left na lang yung natitira sa kanya, right? So, from the perspective of HLC, when I received the cash, nag-increase yung cash ko. So, debit cash, 3,000. Pero, I can't recognize that as revenue. Hindi ko pa nasa-serve yung 3 months ng rent niya. So, I have a liability na for the next 3 months, I have to make sure na walang problema sa pag-rent niya. And therefore, I recognize a liability called unearned rent revenue. Unearned rent revenue is a liability. April 30, my liabilities are overstated and my revenues are understated. Why? Because in the unadjusted trial balance, ang naka-reflect are the March 1 accounts. Na si unearned rent revenue, which is a liability, is still at 3,000 and my revenue is 0. When in fact, I should have recognized 2 months worth of revenue, right? So again, 3,000 divided by 3, meaning I get 1,000 in rent revenue per month. Given na April 30 na, I should have earned 2 months worth. So 1,000 times 2. So 2,000 dapat yung revenue ko. And then yung liability ko, 1,000 na lang, right? Kasi 1 month na lang yung kailangan niyang i-serve eh. And then yung 2 months na perform ko na and therefore, revenue ko na yun. Hindi ko na yung liability. Right? And therefore, our adjusting entry for this would be unearned rent revenue of 2,000, basically pinababa mo si liability by debiting it. And then increasing rent revenue by 2,000 by crediting it. So debit unearned rent revenue 2,000, credit rent revenue of 2,000. So again, basically monthly revenue is 1,000. So times 2, 2,000. So in the unadjusted trial balance of HLC, not Bathala, may balance probably siya ng unearned revenue of 3,000. Pero mali yan. Hindi pa yan adjusted. Let's adjust. Debit unearned revenue, 2,000. Credit revenue of 2,000. And therefore, we show the true value na 1,000 na lang talaga yung liability mo at unearned rent revenue of 1,000. And then may 2,000 ka ng revenue. Kasi 2 months versus sa April. So that ends our deferrals. So honestly, you have to master this. So in essence, for deferrals, you just memorize and then you really familiarize yourselves with how to account for deferrals or prepayments, right? So cash now. Now that we're done with deferrals, let's go to accruals, right? Or incurrences. So cash later. So under accruals, meron ka na namang dalawa, right? You have your accrued revenues wherein you'll have an initial, so first you recognize a revenue and then at a later date, you'll receive cash. And then you have accrued expenses wherein you recognize your expense and then later ka pa magkaka-receive na, or later ka pang magbabayad ng cash. So let's do the same exercise. In accrued rent revenue or in accruals, kindly take note that there's no initial entry. No initial entry because there's no previous cash transaction. Yung first time mong i-recognize yung revenue and the first time you recognize your expense will be your adjusting entries. Pero in the unadjusted trial balances, accrued revenues and accrued expenses don't show up, right? And therefore, since no initial entries, nito is that before adjustments, your assets are understated and your revenues are understated kasi wala kang entry. And therefore, you make your adjusting entry to recognize your revenue, which is debit asset, credit revenue, right? And then yung sa receive cash, we'll take it up in a later date. Pero ang importante lang sa atin is the adjusting entries for accrued revenues. In the same way, for accrued expenses, wala ka na namang entry. Wala kang sa unadjusted trial balance, hindi mo pa nare-recognize yung expense. And therefore, before adjustments, your expenses are understated and your liabilities are understated. And therefore, our adjusting entry would be debit expense, credit liability, right? So let's look at it from an example perspective. For accrued revenues, the classic example of accrued revenues would be accounts receivable, right? So let's look at this example. So at the end of the month, Bathala Consulting finished an engagement with XYZ amounting to 400, but client has not yet been billed. So therefore, since hindi natin na bill, we know na hindi pa yun na-record ever in the accounting period. So basically, what happened was, at March 31, we realized that, before the period ended pala, we earned revenue. Pero, nasa period 1 pa lang tayo, right? And then later na natin makuha si cash in the next period end, probably, right? So we're now in March 31. So what we have to account for is the earned revenue na hindi natin na-recognize before. So at the start, in our unadjusted trial balance, wala pang initial entry, right? And therefore, again, our assets are understated and the revenues are understated because for this particular transaction, yung accounts receivable mo 0, revenue mo 0. So basically, we just record our adjusting entry. Now we recognize the revenue, meaning accounts receivable 400, service revenue credit 400. Right? So we recognize the revenue, right? Yun lang. Basically, mas madali si accruals ata. Right? So no initial entry. So in terms of receivables and service revenue, basically you'll have 400 new receivables and then yung balance mo service revenue probably refers to your other revenues. When in fact, it should be increased by 400 kasi meron ka pang unrecorded. And therefore, our true balance for receivables is 400 and our true balance for service revenue is 10,400. So we're done now with accrued revenues, right? So the last two would be your accrued expenses, wherein you recognize your expense and then you pay cash. So let's first go to interest expense. So basically, Bathala borrowed 8,000 payable in a year with an interest rate of 3%. So for now, I want you to ignore the 8,000 payable. What we're concerned for is the interest rate, right? So every period, you have to recognize magkano na ba yung interest expense associated to my loans. So basically, what happens is that at the end of the period, magkakaroon ka ng expense, particularly interest expense. And then next period mo pa naman babayaran yung interest na yun. Pero now, we have to recognize an expense. We have to recognize our accrued expense. So again, walang entry to, right? Because kinukompute mo lang siya at the end of the period. And therefore, your liabilities are understated and expenses are understated because you haven't accounted for your interest expense and your interest payable. And therefore, our adjusting entry is to recognize expense, meaning debit interest expense of 20, credit interest payable of 20. So we increase our liabilities by 20, we increase our expenses by 20. So what is the formula? How did we arrive with 20? Basically, what we did was, may principal tayo of 8,000. The 3%, and this is gonna be helpful for you for 99, lahat ng interest rates, the implication is that it's an annual interest rates, right? So 8,000 times 0.03, $240 yung annual interest expense mo, right? Pero we're looking at it annual, so for 12 months. Pero we're looking at it from a monthly perspective. So yung 240 mo, we further subdivide by 12 to get the monthly interest expense of 20. Kaya siya 20. So basically, what happens is, yun, we debit interest expense, we credit interest payable. Then finally, salaries expense. So the last example for accruals is that, or accrued expenses would be salaries. So imagine, Bathala Consulting pays 1,000 salaries weekly for a 5-day work week. The end of the month fell on a Wednesday. So again, let's look at it from a timeline. So basically, ang nangyari, in March 31, meron kang Monday, Tuesday, Wednesday, pero babayaran mo pa sila ng Friday. Pero next period na yun. So in essence, 3 out of the 5 workday week, meron ka ng utang sa kanila at March 31. Right? And therefore, we have to recognize a salaries expense recognition at the end of the period. So no initial entry because wala ka pang entry, right, for accruals. So liabilities are understated and your expenses are understated. So basically, di ba every week, 1,000 yung kinikita nila, right? So Monday, Tuesday, Wednesday, Thursday, Friday, every day, every week, 1,000. Now, let's look at it from a daily expense. So divide mo by 5. So every day, technically, our expense or our salary that we should pay them should be 200 pesos per day, ay $200 per day. Monday, Tuesday, Wednesday. So, no March 31, Wednesday raw. So meaning, may utang na ako sa kanila na 600 kasi they already performed their obligation. And therefore, I should recognize a salaries expense of 600 debit and then credit salaries payable na 600 kasi utang ko yun sa kanila eh. And then pag babayaran ko na next period, basically I'll recognize a 200 salaries expense next period, ay 400 salaries expense to represent a Thursday and a Friday. Yun. So basically, that's how you account for accrued expense under the salaries expense. So again, the formula would be 1,000 divided by 5 would be daily salaries of 200. We work 3 days kasi Monday, Tuesday, Wednesday. So monthly expense was 600. Therefore, you debit your salaries expense and credit your salaries payable to reflect the true accounts of 4,400. So now we're done with our interest or our accrued expenses. So interest expense, salaries expense. So for accruals, ito yung mga ginawa natin. We accounted for accrued revenue. We accounted for interest expense. And then we accounted for salaries expense. Right? And that's basically it. So that's the core of the lesson. We just basically taught you how to understand what deferrals are, what are accruals, and how to account for it. Now, let's tie it all together, right? So now we go to adjusted trial balance. So again, we go back to our challenge. Today is the last day of accounting and you are presented with the unadjusted trial balance of Bathala Consulting. So we did the first two. We record the adjusting entries for deferrals. We record the adjusting entries for accruals. Now's the time to adjust the trial balance. So summarize lang, again, yung initial entry sa deferrals, those were for appreciation, pero nakalubog na yun dun sa unadjusted trial balance. So in essence, for Bathala Consulting, we had 6 adjusting entries, right? So what are the 6? You had 3 deferrals, primarily your supplies, your prepaid rent, and your equipment depreciation. And then you have 3 accruals, your accrued revenue, your interest expense, and your salaries expense, right? So therefore, yung unadjusted trial balance, we have to adjust using the 6 adjusting entries, right? So yung 6 adjusting entries, I basically just created a table wherein I just summarized their effects in the debits and the credits, right? So supplies expense, increase, so debit 900, accounts payable, credit 900, etc., right? So again, now that you have, so step 1, record your adjusting entries. Step 2, summarize your adjustments. Step 3, we have to apply to the trial balance. So again, this is the unadjusted trial balance. So now let's adjust, right? Supplies expense muna. So supplies expense 9 plus 900. So let's look for supplies expense. So currently our supplies expense is 0. So we add 900. So now it's 900. We adjusted, right? Next, supplies plus credit 900. Right now, our office supplies is at 950 debit. What does it mean that we increase by credit, right? So meaning 950 debit minus the increase of credit. So credit is the reverse of a debit, right? So bababa ng 900. So 50 na lang dapat yung value ni office supplies, right? So 50. So adjusted entry account ng office supplies is at 50. That is the correct amount, right? So again, you just do that. So again, rent expense plus 1,000 debit. So we look for a rent expense plus 1,000. Prepaid rent plus 1,000 credit. So we look at our prepaid rent. Again, the prepaid rent has a debit of 3,000. What does a credit of 1,000 do to prepaid rent? Meaning, babawasan natin. 3,000 minus 1,000. Therefore, our true prepaid rent account should be not at 3,000 but at 2,000, right? And then we go to the third adjusting entry. Depreciation expense increased. So depreciation expense is from 0 magiging 40. Yung accumulated depreciation equipment, so again, notice hindi natin ginalaw sa equipment. Instead, we introduce what we call a contra asset account, which has a credit normal balance at 40. So, color-coded tayo, di ba? So even though this is an asset account, it's a contra asset, so the normal balance is a credit, right? Fourth adjusting entry, so we're now at accruals. So accounts receivable raw increased by 400. So from 3,000 na accrued accounts receivable, we add 400, so maging 3,400. Service revenue 400, so let's look for service revenue. So service revenue right now is 10,000, so magiging 10,400. Adjusting entry number 5, interest expense 20. So we go to interest expense at 0, so we increase by 20. Interest payable plus 20, so we look at interest payable. So it's at 0, pero now it's at 20. And then finally, our last adjusting entry would be salaries expense. So let's look for salaries expense. So right now, our salaries expense is at 3,800 plus 600 is equal to 4,400. And then salaries payable. So salaries payable 0, now it's at 600. So now we reflect the new debits and the new credits. So now from 24,000, naging 25,210, right? So now we're presented with our adjusted trial balance. Now this is the one that really represents the true values of all of our accounts. So again, the last step would therefore be we make our adjusted trial balance into your financial statement, right? So I'll quickly go over lang. So first income statement, so Bathala Consulting, for the month ended March 31, we look at our revenues, our expenses, and our income. So for revenues, service revenue is at 10,400. So this is again your adjusted balance. And then for expenses, you listed them down by how big they are, right? So salaries, rent, supplies, utilities, depreciation, interest. So from 4,400 to 20. Giving you a total expense of 6,960. So pagbangbain natin, 10,400. $10,400 minus 6,960, 3,440. So net income of 3,440, right? So we're done with income statement. Let's go to owner's equity. So Bathala Consulting for the month ended March 31. What is beginning capital? What are additions? What are deductions? What is our ending capital? Beginning capital 0. We add investment of 6,000. So nasa yung investment. J Cruise capital of 6,000. So investment 6,000. We get the 3,400 in net income, giving us 940 in additions. We less our drawings. J Cruise drawings is 2,000. So 2,000. And therefore, our ending capital is 7,440. So again, we're done with owner's equity. Final would be our financial statement, would be our balance sheet, right? So Bathala, as of March 31, what are assets, what are liabilities, right? So we do it by liquidity. Cash first, accounts receivable, then office supplies, then prepaid rent, then equipment, and then act debt. Again, notice equipment will always be recorded at cost, pero may contra asset account of act debt. So now it will give you a total assets of 16,210. So we expect that the total liabilities in owner's equity would total 16,210. So in terms of liabilities, what are liabilities? In terms of liquidity also. So current liabilities muna, accounts payable, salaries payable, interest payable, and then long-term liability of notes payable, giving you a total liability of 8,770. And then we get the ending capital of owner's capital of 7,440, giving you your total liabilities owner's equity at 16,210. So actually sakto. So that ends our adjusting the accounts for chapter 3. So again, I understand, even when I was a student, sobrang sakit ng ulo ko because of accruals and deferrals. So more than anything, for our quiz 3, which is actually Monday next week pa naman, make sure na you do more exercises than usual. Sanayin niyo yung sarili niyo how to adjust the entries. Try to understand the concepts. And then again, if hindi niyo pa gets, you can schedule a consultation or you can ask in the Facebook group, right? So actually, that ends for today. Thank you so much. I will now stop the recording. Yeah, thank you.